All right, just getting set up here on Instagram. All right, there we are. I'm going to give it a few minutes to have people come in. Happy Friday. Ooh, my puff. Okay. Good morning, everybody. If you are catching the replay, thanks for joining. Please type in hashtag replay or come say hello so I can say hello. If you are new to me, I am a mindset and success coach for overwhelmed entrepreneurs. And my name is Tina Marie. I always say I'm a little discombobulated this morning, but this is part of my Financially Fit Friday. So every Friday I go live and I kind of bring small business accounting or business finances and make it a little bit easier to digest and not so scary to do. So I'm going to take a sip of coffee as people are coming in. And I hope everyone's having a good start to the holiday weekend. All right, I am going to go ahead and get started. Now, this is pretty a meaty topic, but it doesn't have to get too crazy. So I've kind of broken it down into smaller chunks so you can easily digest it. I know when it comes to numbers, looking at our financial statements as a business owner can get really scary. We got into business because we are experts or very good at what we do, but we're not necessarily great at the numbers part or the business management part. But that doesn't mean we can't be. This is why I teach what I teach and shifting from an employee to a CEO mindset. And the thing is, CEOs and successful entrepreneurs, they know a little bit about everything and they are an expert in their main thing. But they have their hands in a little bit of everything so they can understand the overall vision and overall how to execute that vision. So that is why it is. Hey, Brandy, thanks for joining. That's why it's super important. Hi, welcome Proverbs 31. That's why it's super important to know a little bit about all these different aspects when it comes to business. We don't have to be the experts in all these, but we have to know it and understand it. And that's when we bring in experts to help us. So today, I'm going to tell you how you can track and analyze your financial goals. So I've been in accounting since the age of 18. I start off as just balancing the numbers at the end of the night at a restaurant that I used to work at. Outback Steakhouse was like one of my very first jobs. And that kind of grew. I was always good at numbers. So that kind of grew in learning how to do nonprofit accounting. I've done taxes for people, but I mainly did bookkeeping and accounting for business owners. Before I started my business coaching business, I had a bookkeeping business with my best friend. And so that has been that equivalent about 14 years of experience there. So I know a lot of you may have been to business school or maybe taken accounting classes, but they really teach it at a corporate level. I want to bring it down to where you can apply it to your business now and have fun with it. So I'm just going to give you some quick tips on how to track and analyze your financial goals. I'm not going to teach you how to read your financial statement. I'm going to make that a different live down the road. But I wanted to tell you what to focus on when you're tracking your financial goals and how to create financial goals. A lot of times we pull a number out of our head or out of our butt because we don't really know what to look for or how to really calculate financial goals that can help us. Now, every industry is different. I definitely recommend doing some research when it's time to create your budget and understand what are the percentages or profit margins that are on average for your industry. That doesn't mean you need to stick to those numbers, but it can give you a running gauge of how to create your budget if you've never done one before or don't know what to compare and contrast numbers and see if you are on track. So there's definitely a few websites that you can look up. I would definitely type in Google what your industry is and say average budget or average sales revenue, and you'll get some data pulled up because a lot of the industry will pull that information for you. So there's a lot of associations with your industry. So don't get scared that the information's not out there. So Google that, look for that. That way that can get you a running start in understanding where you could be at or should be at on the average. If you're doing better than that, awesome. If you're not there yet, don't worry, you can get there. So that's the first thing that you want to get started to can help you. So things that you want to watch when tracking and analyzing your financial goals, and also even creating your financial goals. You want to obviously increase revenue. We're always thinking about increasing sales, but increasing sales doesn't always mean you're going to have cash flow in the business. So you also want to look at how you can decrease costs. Those are the top two things that people really teach. But you also want to look at how you can improve your margins. You hear this all the time, and maybe if you watch The Profit, or a Shark Tank, they ask you like, what are your margins? What are your profit margins? If you don't know what your profit margin is or how much you're making per product or per service, the way you can break it down is you want to really understand how much your production costs. So how much does it cost to either create that product or create that service? This is usually equivalent to on your financial statement called COGS, which is cost of goods sold, or COS, cost of service. You can ask your bookkeeper or your accountant to help break that down for you. So don't get too worried. It's really how much it costs to really produce that product or produce that service. And your industry standards are going to help you gauge where that should be at. So, for example, I've been in the restaurant industry. Our food costs should be no more than 25 to 27%. Sometimes it can be on the high end, 29, but this is the way restaurants really gauge if they're wasting food or they're not properly pricing their meals. So that's kind of a gauge. So you can look that up for your industry. You also want to look at your overhead costs. And your overhead costs are going to include labor. So if you have a team, a lot of places will break that out separately. I like to as well, but some places will wrap that all in. So your operational costs, that means paying the rent. How much does it cost to keep the lights on, running water, if you have internet? All those different expenses, including buying supplies, will be wrapped up in operational costs. And there are going to be times where you may not have any sales coming in, but you still have to pay for those operational costs. So you want to make sure that is wrapped into when you price your services and your products. So think about that. And then you want to also, don't forget to do tax planning. So I'm going to talk about that a little bit more. But when you're pricing your products and services, don't forget that you're going to be paying taxes as well. Either, and I'm talking about overall your business taxes. Sales tax is just going to be tacked on to whatever product you serve. And depending on the state, most places don't charge for services, but I'm just going to give a caveat there. Check with your accountant if you have to apply sales tax to any kind of service-based things. So those are things that you really want to keep track of and really decide. So it's okay if you have a small profit margin. So let's say you only make 10% profit off of a product or service, but you have to decide, are you going to sell something at high value and a lower margin so you're still going to make that money? Or are you going to sell that at a high profit margin but only sell a few? Hi, Beautiful Dreams. Thanks for joining in. Or you're only going to sell a few. And so that's usually your big high price products and services, or high tiered products. I call them premium or luxury products. Those aren't going to sell as fast because they cost more, but you'll probably make a lot more money per unit on those things. So when you're thinking about that, when creating your financial goals, this is going to help you track and analyze that, because you really want to make sure you're not pricing yourself under where you're not making enough money, especially not making enough money to pay yourself. And understanding those things, these are the top 3 things that you need to be looking at as a business owner, as the CEO of your business, at least weekly. And if you are high volume, like, well, I know restaurants are low now, but if you have high transactions every day, this is something that you're going to want to, hi, PGS CPA. These are some of the things that you want to take a look at every evening. So if you don't have high volume transactions, this is not something you have to do every day. However, you should be getting into the habit of doing this. Cash flow planning. One of the biggest things that businesses go under is because they do not plan for cash flow. They don't bring in enough cash flow. You may be having high sales, but you haven't planned for paying off any business loans that you have. You didn't plan for tax planning, and you didn't plan for your slower seasons. In some industries, you might have a slower season and not bring in enough revenue. So you need to be working with your accountant or bookkeeper who is tracking all your transactions and really crafting a cash flow planning statement. So a way that you can track your cash flow. Now, depending on your industry, maybe you have a ton of invoices out. You have a ton of work and payments are coming in, but are they going to be coming in on time to pay your bills? So that's where you need to work with your bookkeeper and accountant and really tighten up and getting paid faster. That's super important when it comes to cash flow planning. And even if you are not having a ton of transactions, you're just starting out, get in the habit of tracking your cash flow. There are tons of tools out there. I have one for my group coaching clients and my clients, and I make this a big thing to track when are you going to get paid from people and when do bills go out. A lot of times business owners, they just open up their bank accounts, they say, oh, I have this amount of money in there, and we forget that things are going to be coming out, especially if you have auto payments. And we also really forget about those annual payments. So planning for those things when it comes to cash flow planning, that way you are not caught with your pants down and not having enough money. I talked about this a little bit. Tax planning, making sure you're working with your bookkeeper and accountant, that you are paying your sales tax on time, your quarterly taxes on time, and budgeting that money from your bank accounts. Now, in the previous live, I talked about having a separate account for taxes. I say when you get that, whenever you sit down to do bookkeeping and start to move money into the tax account, because guess what? That is not your money. That is the government's money. And so you don't want to get in that trap of, oh, I see that money in my account and actually spend it. And then when it comes to paying sales tax and when it comes to paying your quarterly taxes or your corporate income taxes, that you don't have that money. So work with your accountant and bookkeeper to also make sure that you are purchasing things and allocating things to the right expense accounts for deductions, making sure you're not spending money where it's not going to be helpful for your tax planning. And here's another thing that we don't think about as business owners. Most of the time, this is going to be our sole income. We try so hard to get deductions after deductions, so we don't pay a lot of taxes, but that can also hurt when we want to apply for a loan to buy a car or apply for a loan to buy a house. We don't think about how that can affect us in the personal life and financial world. So this is why it's really important to work with your tax expert, your tax professional, to make sure they understand what your personal goals are and what your business goals are, and they will craft a tax plan, tax strategies throughout the year. And whether they check in with you or not, this is something you should be checking in with your accountant or tax professional every quarter, at least, to make sure you are on pace to not get caught off guard by the end of the year. 3, when it comes to tracking and analyzing your financial goals, reporting, get used to reading reports. And I'm not just talking about your financial reports. There's not one CEO that doesn't have a briefing on reports in their industry, in the business, what's going on in the month, are they on track to their quarterly goals? So get used to and get into the habit of learning to read your reports and seeing how that can, because those are going to affect your business decisions. It's going to affect whether you're going to keep a product or service in the future. It's going to affect how much money that you need to bring in the next few months. So does that mean you need to up your marketing game? Does that mean you need to up your marketing budget? So get comfortable and used to reading reports. So that means your sales reports. Look at that month to month. And I say after 90 days, after you have properly marketed your products and services, if after 90 days you find a product and service not selling high, don't waste your money on that anymore. That is the market telling you, your ideal clients telling you they don't want that. So if you might be surprised what might be working. So look at your sales reports, look what is popular. And just because you don't sell a lot, doesn't mean that people don't want it. It might be a higher tiered luxury item. So you can even look at it as like, okay, I only sold two of those units or two of those services this month, but that's the max that I can hold. That means this is still popular. I'm still going to push this moving forward. If you have a high demand for a product, you might be able to up the price slightly. So testing pricing strategies. So really looking and being excited about reading your sales reports, not just how much revenue you brought in, but which products and services are actually really selling. And you can even go look at your social media reports. What is the social media accounts that you're getting the most engagement in? Which social media accounts are actually driving more sales to you? After about 90 days, you're going to have solid data to actually shift where you can be promoting yourself to boost your sales goals, boost your financial goals. So get used to reading your reports. That's your sales reports, looking at analytics with Google Analytics. Which pages are they driving to? Like which topics on your website, which sales, which items? Look at all of that. And then that's going to really help inform you and drive what you should be focusing on to drive more sales. And your financial reports, obviously. And don't be scared. This is why you have a bookkeeper or an accountant, and have them sit down and walk things through with you. I'm going to give a basic overview on how to read your financial reports in the future live. I'm not sure when yet, but I will, and I'll make it really easy. When I look at financial statements, numbers tell me a story. And so when I tell people that, they're like, what? It does. Numbers will tell us a story, and they'll tell us how healthy our business is, what's selling right, if we're overspending, and what we really need to tackle. Maybe you need to boost more sales, more revenue, because you want to pay down your business loan, your debts, or pay back an investor. That might be your goal versus what somebody else might be. I want to drive more sales and cut down costs because I want to hire someone, because hiring someone is going to help double my revenue. So think about what is really important for you and your growth in your business, and reading your financial statements is really going to help you, and working with your bookkeeper or accountant to work towards those goals. They're not there just to crunch the numbers. They really want you to be successful. So be comfortable in having those conversations with them, because they are, honestly, that's the only reason why I'm great at business strategies, because I've had that background in accounting. They know what's going to make your business healthy and help you grow, and they can even help you with your pricing strategies. Think of them as a little CFO in your pocket. So those are the top 3 things that you really want to use to track and analyze your financial goals. Is your budget. We talked about that. Is cash flow planning, and learning to love your numbers, reading your reports on a regular basis. Depending on your industry or how volume with your transactions are, if you're super high volume, like restaurants have a ton of people come in every day, or a store might come in every day, you might want to balance your books and look at your reporting every evening. You might be as frequent as every week, but get used to doing that at least every other week. Bare minimum monthly. Check on them monthly to see what is working and what's not working. If you have a product or service that's kind of teetering on, and it's not a lot of sales, but it's not like too little, maybe you can up your marketing ante there and help boost sales for that product or service. So yes, so budgeting, that's what you're going to need to help track and analyze your financial goals, cash flow planning, and tax planning with your tax professionals. Now, if you just popped in, don't worry. I broke each one of those down earlier, so go ahead and watch the replay. But those are the things that you really want to look at when it comes to your business. I know a lot of us are like, I just need to bring money in. I just need to focus on sales. But a lot of times we are not working smarter. We're working harder. And a lot of times it could be as simple as, I just need to sell 2 or 3 of my high tier products and just focus on that, and I'll meet my sales goals for the month. So really getting used to and being comfortable with tracking your reporting, reading those things, because that's going to set you up in a CEO mindset. That's going to set you up for success. I don't know one successful business owner who either didn't love numbers, loves numbers now, because it tells a story. So I hope this was helpful for you. If you have any questions about anything that I talked about today that you want me to break down more, let me know in the comments and I will make sure to either do a future live there or might make it a training class, a master class to help y'all out. So I'm super excited. I definitely go a lot more in depth with this and make it easier and work with you in my group program, Employee to CEO. I talk a little bit about this in my free challenge and give you some action steps. So during the challenge, I'm going to help you shift from an employee to CEO mindset in 5 days. So I'm going to talk about the 5 top employee mindsets that most business owners employ that keep them stuck. That keep them not taking that next level or taking their business to the next level. And I teach you what successful CEOs and entrepreneurs do and the type of mindset that they have in order to step into that. So that starts July 13th to the 17th. You can sign up now at profitproject.co/E2C challenge. It's here in the descriptions, and I'll make sure it's here on Instagram for you all. But sign up. I already have like 10 people in there, so I'm excited. Can't wait to see you guys. We're going to have a big party on Friday the 10th in the Facebook pop-up group for the challenge. And then each day I'm going to be going live at 10 a.m. and teach live about that particular employee mindset that most business owners have and what's the CEO mindset. So I would love to see you guys in there. And I hope you guys all have a happy and safe holiday weekend. All right, bye y'all.